Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn Associates with your agriculture update for this Tuesday, the 25th of September, 2018. We're about 3:40 p.m. Central Daylight Time. A mixed day in the grains again. The wheat down a little bit, the beans up a little bit, the corn playing around 3 cents. As you know, harvest is underway. The markets are starting to talk about that in a big manner. And now the question is, have we seen harvest lows or is there another wave coming to the market? That's what I think everybody's looking at. We're still in the hog market, hearing constantly out of China concerns about the African swine fever and how they now, the Ag Ministry said today, have to secure supplies of pork for Beijing. So this is not a little bitty deal. It keeps getting bigger and bigger. It's something to watch. And of course, you're aware that China stepping in to South America and becoming the big buyer of Brazilian beans and then Argentine products and so on. They're going to dominate their markets. As we come this week to the weekly area chart of closes for the beans so far, we're down 1.5 cents on the week. We've gone from 8.86 1/4, the last rally high off that break low towards 8.10, back down to 8.11 1/2, and we've had another bounce in the market. I'm still a bit concerned with the overall pattern of lower high closes, and we're not getting to that breakout point. When you come to the daily bar chart, a little more friendly. Today we had what's called an outside day up. When you get an outside day up, what I don't like to see is the market take out what? The low of an outside day up either the next day or the day after that. In other words, for the next 2 sessions. If it does take it out, I call that a bull trap. We'll see what happens here. And if you take a look, you can see how the market now with this pattern has higher lows. We certainly have the higher highs. So I can call the pattern, at least at this point, bullish. The market's holding the 18-day average of closes. Now, the interesting part, and I never did figure out what to do with this, is if you take out the low of an outside day up, but you're right on the 18-day average, I don't know where the market goes. So it would not be the worst of signals, like normally I'd say if it happened at a much higher price or a much lower price, depending if it's outside day up or down, if you get that trap. Not right here. What else is obvious? Look at the sideways action that's been developing in the market. The Bollinger Bands help you sometimes see that sideways action. And think of sideways action like this, as a pipe. And in the pipe, price is winding itself. And as it winds itself, it's building pressure for a breakout one way or the other. That's what I think this market's trying to do. In terms of momentum, as measured by the slow stochastic study, it has been coming up, but any reading over 70 I consider to be overbought. So what I have now is a market that I think is overbought, got up to the upper Bollinger Band number. Again, it did that about 3 days ago, and failed there one more time. When I come to the meal market, I think today's action was not good. The market gets up, tries to stay over the 18-day average, fails. Yes, we have a pattern of higher lows. Okay, I can live with that. Yes, momentum is flat, and really prices are stuck against that 18-day average again in this sideways action. Sideways action I always keep my eye on. In the soybean oil, I think that this rally that we've had via momentum pointing up and carrying the price, we are in overbought territory. If it continues, I'd argue for the 2907 level, the upper Bollinger Band, to be the big resistance point. If it decides to pull back, the first support I see in the chart's 2819. But more important to me is I don't see a trend. I see a market with a lower low, higher high that is momentum into overbought area. It's got a bit of an upside bias. In the corn market, you still have a lower low and a higher high. Unlike the soybean complex, you're not overbought. You're nowhere near the upper Bollinger Band. You've spent the past 4 days in a row hitting that 18-day average of closes. And in all fairness, you're not going anywhere. The market seems to be running out of some of the momentum that it's spending. The wheat market is still bullish at this point in definition of higher lows, higher highs. Prices are staying over the 18-day average of closes. That would be lost if prices got under the 515 area. But barring that, this is where I think the pros are trying to make their stand. And if they could drive prices higher, this area between the 18-day average and the upper Bollinger Band would be their target. In the sugar market, I still see a bearish market. Lower highs, lower lows. Admittedly, oversold. Target the 1010 area, that lower Bollinger Band. Coffee market, how many times do you have to see this market get to the 18-day average, the red line, and fail, and it's still there? Trend down, bias down, momentum down. If the market can break further, maybe it gets to the lower Bollinger Band. In the cocoa market, you have a market without a trend. You've got a lower low and a higher high, trendless. Momentum-wise, oversold, bias down. I don't see anything there. Cotton market. Cotton's trying to lift itself up, and if it were to lose the embedded reading, getting over 20 on a close, I could then make an argument that maybe it's ready to get more short covering. Until that occurs, I think these rallies are still being sold, because the strongest part of a chart, as I teach charting, is when you get an embedded reading. In other words, when the slow stochastic oscillator converts itself to going sideways under 20, it's called locked in or embedded bearishness. The same thing can happen on the upside, embedded bullishness. In this case, as long as both numbers stay under 20, I think the bears control the day. In the cattle market, you have a pattern of a higher high, a lower low, and today you lost the embedded reading. When you lose the embedded reading, it means momentum's being lost in the market. When that occurs often, the word is not always, but often, price and the 18-day average try to come together. In the feeder cattle, same thing. You know, you've got, first off, the trend down is defined by lower highs, lower lows. You lost your momentum in this market. If you take a look at this action on Friday, both numbers were over 80. They lost it yesterday. They did not regain it. It's lost. That gives me the high probability, in my head at least, my analysis, that price and the 18-day average are going to try to make a big run at each other. Do they have to? No. Should they? Well, the way my analysis goes, I'm hoping. In the hog market, I still see the higher lows, higher highs. In the back of my mind, and I don't use that when I do chart analysis, but in the back of my mind, I told you I'm not going to forget about this African swine flu. If, God forbid, it came to America, a whole new nightmare would happen. But support back at the 18-day average of closes. So you put it all together, you understand that tomorrow's going to be another type of day where we're going to get more dramatics out in the United Nations. Thursday, you're going to get the Supreme Court circus, as I like to call it, about what's going to go on there. And will this impact ag? Probably not. What could impact ag more than anything will be when tomorrow we start hearing about what? The FOMC, 1 o'clock announcement, then the press conference coming in, and what that means in terms of dollars, what the Fed is thinking. Want to remind you, I write about all this, and I start off my research people with a morning video, 8:30 in the morning. As soon as the meet's open, I record a video, and I start talking about things I'm seeing on the different charts. And I go through 40 charts each morning. Then twice a day I write about the markets. Don't know why we're getting that going right now, but I'll write about them. How you get all this is you just call us at 866-973-2077. You can also go to our website at www.iraepstein.com and try it there. I'm Ira Epstein. Here's how you can get to all that information. Remember, you can always click up here if you're watching me on YouTube. Have a good day.